Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos, Santos, and here are today's top stories. Despite headwinds clouding the country's growth story, economists are optimistic that the local GDP will expand by up to 7% this year.
Now, on the global front, traders in the United States now expect the Federal Reserve to raise interest rates by as much as 1%. That's after U.S. inflation soared to its highest level in 4 decades. Over in Europe, economists see recession in the region as inevitable.
Filipinos stuck in Sri Lanka are asking for help as the economic crisis in the South Asian nation continues to worsen.
And President Bongbong Marcos throws his weight behind calls to review the country's education curriculum in a bid to address the job mismatch. We begin our broadcast with the economy expected to grow up to 7% in 2022.
And despite headwinds, the country is not likely to see any rating downgrade this year. The University of Asia and the Pacific and First Metro Investment Corporation kept their GDP forecast at 6 to 7% this year, faster than the 5.7% full-year expansion recorded in 2021. Economist Vic Abola says the country's situation is now better and President Bongbong Marcos will be generally positive for growth. Abola also says any credit rating downgrade for 2022 and 2023 is unlikely, noting that the Philippines continues to enjoy sustained growth in remittances and the BPO sector. As for inflation, UA&P and FMIC expect the CPI to hit 5 to 5.2% this year, largely due to the impact of higher global oil prices on domestic products.
Now, Finance Secretary Ben Diokno says it is too early to make adjustments to the existing tax system on personal income. Diokno was reacting to a House bill filed by ACT Teachers Party List that aims to address imbalances in the train law and create, which the party list says offer little benefit to the poor and middle-class families. But the finance chief says it is too early to tinker with these tax reform laws as they have only been recently amended. Diokno adds that the new tax system should first be given a chance to operate.
Now, do you feel like your job doesn't match your skills? Well, to address this problem among workers, the president is now supporting the review of the country's education curriculum. The palace says Marcos Jr. wants to address job mismatches by upgrading the skills of students. The Trade Department and TESDA have both expressed openness to conduct a curriculum review.
We have strengthened yung mga industry boards in TESDA para po lahat ang pag-develop namin ng training regulations kasama namin ng industry. Paggawa ng competency standards.
Online employment company JobStreet says job mismatch also refers to the ability of employees to match the expectations of their employers, especially in terms of skill set. Country Manager Philip Gioca says the education system should not only focus on teaching hard skills but also soft skills that are important to employers.
Yung soft skills hindi natin pwedeng kalimutan. So unang-una dito, teamwork, critical thinking, survival skills, resiliency, and time management. So ito yung mga bagay na kinakailangan ituro. Madaling ituro yung hard skills kasi may curriculum na tayo para dyan, i-enhance natin. Pero babalik pa rin tayo dun sa soft skills.
So much economic woes to discuss here, and a broad question is how will all these factor in the President's first State of the Nation address in 2 weeks' time? Let's get insights from BPI's Chief Economist, Neri. June, good morning.
Morning, Des.
All right, thank you for joining us again. Let's pick up from that report. Job mismatch, you have President Marcos Jr. pushing for reforms in the educational system to address that. How big of a problem is it really, and how will this at least help improve the labor market?
Well, there is really some room for improving the quality of especially secondary level education so that they can immediately land jobs shortly after K-12. Unfortunately, the skill set doesn't seem to match the demand just yet. But the program itself looks like it's getting there. Yeah.
No, but in the near term, the more immediate problem or issue that we have to address, at least in the education sector, the resumption of face-to-face classes. You have the private sector pushing for it, saying that, it's going to be really crucial if we are to achieve our growth targets for the year. Your thoughts on that as well?
Oh, yes. Clearly, there has to be more compliance with the use of masks. And hopefully, we can get the boosters going to meet the real targets, not the original targets. Because if we become lax on this, it will be difficult to sustain this reopening of face-to-face, whether it's work-related or schools. Of course, schools very important. We can really boost demand if the kids can be made to go out more clear or more completely. For example, I heard a talk about laundry soap. Huge demand for laundry soap takes place, but kids go back to school face-to-face. So that will help revive some of the domestic industries.
Sir, difficult question here, but what is the link between face-to-face classes and GDP growth? Do you have some sort of, as soon as we get back to face-to-face classes, do you have some sort of idea of what that impact could be?
And how soon can we feel that as well?
Well, it's almost immediate because, kids really are the top source of purchasing power on basics in a family. So the kids will ask their parents to bring them to a shop, to a mall, to those places that we used to patronize pre-pandemic. Of course, there is the online alternative, but in general, it tends to contribute a lot to household consumption. So we had strong numbers in the first quarter, even with Omicron. Even with the beginning of the Russia-Ukraine conflict. Hopefully, we can sustain a bit more of this in the second half because inflation is really starting to hit the pockets of regular consumers.
Okay, sir, but in the long-term effects of the closures of the pandemic, is there a direct impact on the, employment rate or the labor force because of this skill mismatch that might be occurring? And how long might these effects be felt?
That's very difficult to measure, Danie,
I know.
but clearly the learning gap is adding to the already somewhat lagging indicators of the Philippines on the quality of our graduates. Our PISA scores still lag behind our ASEAN peers. Our spending on education continues to lag our peers. So with a very tight budget, we might not be able to spend enough on health outside COVID. Or the boosters, So we have to spend on health because a lot more children are getting malnourished because of the high poverty rate. So very complicated, but workable policies.
Okay, sir, just, to highlight on one of the key issues here, offshore, which is, of course, the 9.1% inflation print in June over in the US, and now parang all bets are off na. It might be 3.75% interest rate in the US, which is higher than our own interest rate, even if we hike by 100 bips. Does this in any way have a bigger impact na naman? Was this not already, priced in or expected? And how might this affect our own purchasing power if the rate hikes might be faster than expected?
Yeah, well, again, the number last night was a surprise, and it's some are actually the traders. If you look at the market indicators, they're now looking at possibly a 4% year-end policy rate in the US. So so I won't really hold my breath till August 18 because the next FOMC meeting is coming very, very soon, July 27. So this long period of waiting could cause a lot more suffering for Filipinos because of the weaker peso and how it affects inflation. Just earlier this morning, I heard the MAS, Singapore, announced an off-cycle tightening. So this is something that we can probably do. Out of necessity, even if you have to take back some of the words that we said, it's just necessary so that less and less, we can reduce the suffering of the marginalized. This is hurting a lot of people, especially food.
Okay, sir, but would we have some benefits, if any, for example, lower prices of oil in the short term, if there is, this recessionary effect. I mean, that's the only positive thing I can think of here, that might ease the burden in at least domestically in the short term.
Yeah, that's there has been some easing of the increases in oil prices globally, but again, it's hard to expect that this will persist, no? Because the conflict hasn't ended, and who knows if this tightening of the U.S. will be enough to reduce overall demand and keep prices low. But hopefully at some point, but it doesn't look like it's gonna end anytime soon. The tightening has to happen, and Danie and Jazz, domestic demand is not weak. We cannot say that rate hikes are not due already for the Philippines.
Okay.
You've seen import numbers really strong.
True.
You've seen loan growth double-digit for 2 months straight already. Now, even if you remove oil in our imports, it's still up by almost 20% year on year. So it's not just about higher prices. Domestic demand has really rebounded. Yeah.
Having said that, June, do you feel like we are that immune? At least macro fundamentals are sound enough for us to actually be immune of a looming recession here, especially in the West?
Yeah, as long as as long as we preserve our international reserves, we are able to carefully manage it. Even if these high prices persist and recession in the U.S. does happen, we should be able to still grow by a decent growth rate of about 4 to 5%, maybe even 6 next year. It was really something like a pandemic which can hurt us. So we have to be careful of this monkeypox thing and make sure that our healthcare system is also strengthened to avoid another COVID type of lockdown.
If a recession does happen, how might actually that impact remittances?
Well, the fact that our workers are quite well diversified globally. Now, for example, when oil prices were high, Europe is hurting, so remittances from Europe kind of slowed down, but remittances from the Middle East improved. So it's your well diversified. Danie knows this very well. She's a finance expert, and diversification of our remittances helps a lot in making sure that the flows continue.
All right, now let's go back domestically. At least in 2 weeks' time, you have President Bongbong Marcos Jr. delivering his first State of the Nation address. What are you most eager to hear about from him, especially when it comes to addressing all these economic woes?
Well, I'd really like to hear more about how job generation can be enhanced, and higher quality jobs be made available to the public, because all of these aspirations of A rating, lower poverty, these are higher middle income. All of these aspirations will be very difficult to achieve if we don't have the jobs coming in. I mean, we've been relying on the growth of malls and pogos and funded by overseas Filipino workers, and it can only bring us to 6% growth, maybe 7% tops. But if you can strengthen your manufacturing sector, strengthen your agricultural sector to the point where high quality jobs can be made available here, onshore, not having to fly out of the country. The multiplier effect of that is going to be significant, and that 8% possible growth target that Secretary Jokno mentioned can be more viable. So that's where I want to hear the plans. Aspirations are good, of course, and it helps you. It provides a guide on the things that they will avoid. For example, rice 20 peso per kilo rice is impossible if you want A rating, an A rating with the credit rating agencies. So really, I want to hear where will we provide the jobs, will manufacturing be revived, will BPOs be strengthened, because they seem to have taken a back seat in the last 6 years.
Sir, final question. Realistically, it does seem that PBBM's pronouncements seem much more fundamentally linked, diba? Agriculture and then education much more long-term compared to what you mentioned, that our focus was always remittances, BPOs as the third leg, diba? But won't that take longer? It's going to take so long for us to reap the benefits of such, revisions in the system. Will that allow us, you mentioned, to reach this 8% targets that they have by 2023 and moving forward, or is it going to take us quite some time?
No, those things are gonna kick in at least 2 to 3 years, Danie. No? But the low hanging fruits, the quick wins are in the pandemic. No? I think again the reopening of schools is really crucial, and we have to take the wearing of masks and all of these simple protocols seriously, especially the boosters. The local governments really have to take this seriously for us to be able to reopen schools more quickly. That's the quick win.
Okay.
Danie.
Interesting. So we do have low-hanging fruit
fruits, but
here,
there's also a
keeping
long
us at
game to be
6%, and then the differential.
You have to balance.
Hopefully
You have to balance the two,
it.
yeah.
All right. Thank you so much. Great insights there from Neri, Chief Economist of PPI.
Let's pause for a quick break, but coming right up. TV5 Chairman Manny V. Pangilinan expects the network's block time discussions with ABS-CBN to wrap up soon.
More of that and other stories when Businessworld Live returns. Stay with us.
Sri Lankan President Gotabaya Rajapaksa was also scheduled to resign yesterday, but instead of stepping down, he fled to Maldives via military jet. The unrest in Sri Lanka prompted some Filipinos to seek government help. They say that it is making it almost impossible for them to live a normal life in the country.
Talagang mahirap, ma'am, dahil sa mga pagtaas ng mga bilihin ay sobra po 100%. Nangangamba po kami, ma'am, kasi hindi namin alam kung ano ang mangyayari. Kasi ma'am, sa ngayon nagkakaubusan na rin yung mga stocks ng mga rice dito.
Talaga pong nag-alala po kami, lalo na pag sa sakit. Kasi wala po talagang, unang-una sa lahat, walang transportation papunta sa hospital. Pangalawa po, wala na pong medicine. Marami pong nagsusuicide na, marami na pong namamatay heart attack.
Now, overseas Filipinos are now asking for aid amid the growing tension in Sri Lanka. They're also awaiting the DFA's promised cash assistance of $300 per adult and scheduled repatriation flights. Now, for its part, the Migrant Workers Department are now coordinating with the DFA for the repatriation of the 150 Filipinos seeking to escape Sri Lanka.
Well, yung sa Sri Lanka, medyo miss teritoryo na yan ng Department of Foreign Affairs, Kated. Pero nag-usap kami ni DFA Undersecretary Eddie De Vega kahapon, and ang binigay niyang update sa amin ay meron tayong 700 Filipinos sa Sri Lanka, over mga more or less 150 sa kanila ang nagre-request ng repatriation, which inaasikaso na ngayon ng DFA.
President Ferdinand Marcos Jr. has tapped Aboitiz Equity President and CEO Sabine Aboitiz to lead a group of business experts that will give him advice on key economic issues. The newly established Private Sector Advisory Council is expected to help the Marcos Jr. administration to deliver its commitment to transform the Philippine economy by providing feedback on what's happening on the ground and make recommendations. Other sectoral leaders of the PSAC include Eileen Ugongko Ong Cauco, Joey Concepcion, and Henry Aguda. The president met members of the council in Malacanang last week.
And after 11 years, the Commission on Higher Education has lifted the moratorium on new undergraduate nursing programs. The moratorium prevented new higher education institutions from offering the course nursing to address a boom in nursing graduates who supposedly did not receive quality training and education. But CHED Chairman Prospero de Vera says they decided to lift the moratorium after an exhaustive discussion, noting that graduate programs now have less enrollees and are producing less graduates. Data from the Health Department shows that currently there are only 90,000 nurses in the country, 200,000 short of the over 300,000 required by the UN Sustainable Development Goals.
Meron na pailan-ilan nag-a-apply but we have not looked into their application. But I imagine that when this moratorium is lifted, we will have a significant number of HEIs who will apply.
Renewable energy firm Alternergy has filed an IPO application to raise up to 2.18 billion pesos. Alternergy intends to offer up to 1.28 billion common shares at a maximum price of 1 peso and 48 centavos per share and an over-allotment of up to 192 million common shares. Proceeds will be used for the implementation of the company's renewable energy projects, payment for shares acquisition, and pre-development expenses of other projects, among others.
TV5 Network and ABS-CBN are expected to wrap up their discussions soon. This was confirmed by TV5 Chairman Manny V. Pangilinan. He says that they are also discussing the airing of additional Kapamilya shows on the Kapatid Network. But Pangilinan adds that there is no definitive date when the programs will be shown. For now, Pangilinan says both TV5 and ABS-CBN are in no rush to close their negotiations.
Wala namang regulation as to when we should finish. So, wala man. I think, hopefully, soon enough, pero wala pang.
Happy birthday to Boss MVP.
Oh, exactly. Happy birthday, boss.
And those are the biggest stories on the economic and corporate front today. I'm Jess Delos Santos.
And I'm Danie Laurel. We are One News, but don't go away. We'll give you the latest on the local bourse when Businessworld Live returns. Stay with us.
All right, pull back from the markets on the back of foreign outflows, and we may see more pain as bets veer towards the possibility of a 1% Fed hike. Dan, tell us more.
Exactly, Jess. So we already have felt the foreign selling here of our own Philippine stocks that accelerated already last week. Our 5-day moving average, we've lost around $6.8 million every day worth of shares from our foreign investors, and we were already down by 2.9% yesterday. And if you take a look at the pain that we're seeing across the US as well as Europe on the back of all of these pronouncements on a higher than expected rate hike, we can also see that the index, our local index, is following suit. We are now at 6,200 levels yet again, Jess, so down by 2.3% in the past 3 days. Now, another interesting thing, however, is the oil prices are actually, paring back below 96, or at least slightly above 96 levels na, Jess. It's below $100 a dollar, which might bode well for at least the peso. Let's take a look at how the peso is performing this morning. Weakening a touch, so nevertheless still above 56 levels. We haven't broken below that again in the past 3 days since we've broken above that. So 56.325 to the greenback. And finally, just a very quick peek on one specific stock, Emperador, that is listing today in the Singapore Stock Exchange, that already rose by 5.1% yesterday ahead of today's listing. But you can see that it's been gaining quite a touch. Today, it's up by 44 centavos. It's 2.5% gain on the listing date itself, 17 pesos and 86 centavos for the Philippine part of that listing, Jess.
All right, and that's it for today, July 14, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess Delos Santos.
And I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News, all sides, all the time.